Hey guys, it's Gareth here and welcome back to my channel. So there's been drama on Wall Street over the past few days and things have been completely crazy. And guys, this has made headlines around the world. You've got guys like Mark Cuban and Joe Rogan and Jim Cramer all weighing in with their opinions and talking about what's making headlines right now. Even Elon Musk was tweeting about it. Which I guess is no surprise because Elon Musk has had his run-ins and clashes with short sellers in the past when they were shorting Tesla stock. So I've had a bunch of you guys reaching out to me this past week asking about what is going on with Gamestop, GME, AMC and other companies. What does it all mean and should we be investing in this? And this is a really big moment in the stock markets right now. You're seeing the strong pushback against the establishment of Wall Street by everyday people. And it also seems that there's this lingering anger and resentment towards Wall Street and these big hedge funds because in the 2008 global financial crisis, they got off quite lightly, and everyday people, ordinary people had so much financial pain and hardship. So guys, let's take a look at what is going on. How did this happen in the first place? Should we be investing in this? And have you hit the like and subscribe buttons? Alright guys, so what is GameStop? Well, GameStop is a big gaming retailer in the US. They used to have many stores scattered across the US selling games. But then with gaming going more and more online, they started to struggle a bit and their stock price started to come under pressure and drop. Now, some of the big hedge funds on Wall Street picked up on this and they started to bet against them. How do they do that? In the financial markets, you can buy and sell stocks, right? But you can also buy and sell other securities like a derivative, which is a position on a position. For example, if you take a short position, a derivative short position on Apple stock, and that price drops, that's actually when you're making money. You're betting that it's going to drop. And if it goes up, you lose money. Now, there are parts of the story that get pretty technical, so I'll do my best to keep it simple and give you the parts that are most important for you to know. Now, some hedge funds had big short positions on the GameStop shares, expecting that it will drop. And not only was the stock being shorted, but it was being shorted by more than 100%. And if that seems strange, it's because it is. Let me explain. How can a stock be shorted by 113%? I mean, how does that even make sense? That you would have more stocks being shorted than would actually even exist in the market. It's unsustainable. And eventually, some of these people that were so aggressively shorting that stock will have to go out and actually buy that stock in order to close their short positions and bring the overall short to at least less than 100% again. And then on top of that, GameStop came out with some pretty good performance, right? They actually started seeing some good growth and they've had some good strategic partnerships to help them grow their business. And as a result of this good news, the stock started doing well, people were more interested and more people were buying their stock again. So a bunch of investors from Reddit called Wallstreetbets grouped together and called the bluff of these big hedge funds on Wall Street and went out and bought the stock of GameStop. And when the stock price started increasing, those big hedge funds started losing a lot of money. They picked up on this weird thing where the stock was more than 100% shorted and they knew that eventually whoever is shorting that stock is going to have to buy it back in order to close their short positions. So when you have more and more people going out and buying that stock, well, there's more demand, right? And more demand for a stock will increase the price, and it increased a lot. By how much? Well, the GameStop stock increased by thousands of %. And this forced a lot of those hedge funds to go out and buy that stock aggressively to close their positions because they were losing billions and billions of dollars. Remember, these hedge funds had a short position on that stock. So when the stock goes down, they make money. But when the stock goes up, like it was doing in this case, they were losing a lot of money. Now, Graham Stephan just did a really good video where he explained the concept of a short squeeze, okay? I've included a link to that video in the description. You can fast forward around 5.5 minutes into that video and then catch it from there. He uses some animation and explains it quite nicely. But here, let me explain the important parts that you need to know. So, more and more people were going out and buying the GameStop shares. Whether it's because they knew that these hedge funds had big short positions on them, or because of the positive results of GameStop, or because maybe the content of the Reddit group, or maybe even just FOMO. But the point is that more and more people were going out and buying the stock. And with so many people coming in to buy the stock at the same time, including those big hedge funds to try and close their positions, the stock price took off and it just rocketed up. Well, it rocketed up until the trading of that stock was suspended. And this is where it gets even more interesting. And this brings us to another part that's become quite contentious in this whole story. And that's that many brokers like Robinhood started canceling people's trades to buy that GameStop stock, right? So people couldn't even buy that stock anymore. Without their permission, their purchase orders, their orders to buy that stock was being cancelled. And not only that, but apparently some people even claim that their stocks were sold without their permission. Now, I don't know about you guys, but to me, that just doesn't seem right. How can they go into your account and cancel an order that you have for a stock that you want to buy? Does it make sense? Maybe it happened to you. Or you've identified the stock that you really want to buy. You believe in the stock and you think you can make some money on it, but they disable your buy button on the application so you can't execute that order to actually buy it. How frustrating is that? And also, if you look at this from the other side, right, where you're in a position where maybe you're losing money, do you think they would be doing the same thing? Say for example, you had some Tesla stock and the stock is down 20%. I don't know if they would be doing the same types of actions and disabling certain functions in the same way. These are valid questions to ask, right? And it's not just Robinhood, right? There were other brokers like Webull and TD Ameritrade that did the same thing. And now there are many people claiming that, well, these brokers were really manipulating the market because they weren't allowing the free market to determine the stock price. They were restricting people's ability to buy it, and they could only sell that stock. So really, is the stock price a fair reflection of demand and supply for that stock? Probably not. And if they did allow people to continue buying those stocks, it's quite likely that the stock would have continued to increase. And there seems that there were a lot of buyers willing to pay a higher price for that stock. So I'm sure we can hear a lot more about this in coming days, and there may even be some lawsuits to follow. So an interesting point that Joe Rogan made on his podcast when he had a segment recently where they talked about this whole GameStop share and the shorting and everything like that, this whole issue, is that it seems kind of strange that the regulators now want to step in and introduce more regulation when they were pretty silent when these huge hedge funds were making billions and billions of dollars employing similar techniques. And he was posing the question, is it just because it's now different people doing it and benefiting from these techniques? It's the everyday, ordinary person. Remember, they were using public information, buying stocks at market price, and there's been no mention of insider trading. But yet, this whole thing is being investigated for market manipulation. So many are asking, well, how is this different to what big institutions do every day, right? So many questions. And look, at the end of the day, I'm sure that we're going to see more regulation to try and address and avoid this crazy volatility in a stock price. And these big financial institutions, I can kind of see them investing heavily in improving their systems, in improving their artificial intelligence, their high frequency trading machines, to try and address this so that they don't have these billions and billions of dollars in losses again. And I think this has also been a really powerful demonstration of the influence of social media and having people really connected these days, where they can connect, they can group together on a platform like Reddit and have such a big influence and literally shake markets. And I'm sure this is not the end of the story, and I'll be keeping a very close eye on it. And this is a bit of a David versus Goliath story, where David, this everyday man, this group on Reddit, won the day and actually beat Goliath. Now, the question is, and I'm sure many of you are wondering, this is all interesting and it's crazy, but should you be investing in this as well? Should you be buying AMC and GameStop stock? Well, even if you wanted to, You might not be able to because your broker might also have grayed out that buy button and limiting your ability to even purchase that stock in the first place. But secondly, it's hard to justify that these companies are all of a sudden worth thousands of percent more than it was a few months ago. It's not like there was this huge structural shift in these companies that would justify those valuations, potentially, right? And this means that it's going to be very volatile and it's very uncertain if the stock price will actually continue going down or if it's going to come dropping down aggressively and you could lose a lot of money. So whatever you do, please be careful. It's going to be very bumpy, it's going to be very volatile, and this is not over yet. So if you do decide to make an investment and you find a way to be able to make an investment, just know that it's pretty speculative and it's a very high risk. It's very possible that the stock price can fall right back down to where it was before all of this happened. So please be careful of that. Now guys, I'm really curious to know, what do you think of what's happened? Do you think that there's been some market manipulation by these investors on Reddit? Or do you think, well, it's pretty much the same as what Wall Street have been doing all this time? What are your thoughts? Do you think this is dodgy? Do you think it's fair game? Do you think there should be more regulation? I want to know what you guys think about this crazy time. So let me know down in the comment section below. And guys, a necessary disclaimer, I'm just somebody sharing my opinion and my views with you here on YouTube. But this is not investment advice. Please make sure you do your research before you do anything. And that's it for the video today, guys. I hope you found it interesting with all of this drama going on. If you did, please make sure you give it a thumbs up and subscribe to the channel. Also share this video with other people. I know that many have been asking about what's going on, kind of curious to understand the story and what it all means. So make sure to share it with them. You can also click on the notification bell so you get an alert whenever I upload a new video. I'll see you next time.